And good afternoon. Welcome into a Wednesday, December 9th edition of Market Talk. I'm your host, Jesse Allen, and a good afternoon to you. Happy holidays to everyone tuning in. We appreciate you joining us here on the program, markettalkag.com. That is where you could find us on the web. Find us on Facebook, Twitter, Instagram as well. It is all at Market Talk Ag. And find us via our radio affiliates, including KGNC in Amarillo, Texas, the stations out in Brookings, South Dakota with Alpha Media, also KLGR, Redwood Falls, Minnesota, and KWMT in Fort Dodge, Iowa. Today's guest on the show, let's bring in our good friend Mike Zuzolo with Global Commodity Analytics. And Mike, I want to start just with the news of the day. Former USDA Secretary Tom Vilsack sounds like he's going to be the new Secretary of Agriculture in the presumptive Biden administration. And, we saw the markets trade higher today. And I'm wondering, was that just some positive news that maybe helped out the markets today? What are your thoughts on that?
Yeah, whenever we get close to a USDA report, a WASDE report especially, Jesse, we tend to move away from the macro factors and to concentrate and put on the front burner more of the supply demand or ag factors. And I think that's what we had in the price action today. And I think Vilsack's news helped the market, which is already starting to move higher for a couple different reasons. Most importantly was Ag Rural coming out with their Brazilian bean production forecast, taking it from a little over 132 million tons down to 131.6, I believe it was. And that's getting closer to my 130.5. But they mentioned the big D word, drought. And I think that's really what set us up for a turnaround in the market, along with some wheat news coming out of the Baltic states, Ukraine, Russia, and still dry weather here. So things are clicking along. But Vilsack and that news coming through didn't do anything but help support the market in terms of a continuation. They didn't see any kind of an abrupt change in policy when they saw that name come across the wires, I suspect.
Mm-hmm. And I think that's something that maybe gave a little bit of calm to the marketplace as well. Folks going, okay, someone with a lot of experience is going to be in this role, and that's only going to help out agriculture and help out farmers. Now, you mentioned a few other factors. Obviously, we have a WASDE report coming up here on Thursday. We're not expecting many changes, but then again, the way 2020 has been, who knows what USDA might do in this report. Usually, they wait till January. We get those final U.S. production numbers and things of that nature. But I'm wondering, and I've said this earlier this week, I kind of have a gut feeling we might see a small surprise in the report tomorrow.
Well, two things, and I'm in the same camp as you are, because we've learned that USDA is not to be predicted or expected because they're on their own timeline and on their own schedule. Two things I think that will help keep the weather bowl running and keep him fed after the report is that if the report can show a reduced supply of U.S. ending stocks of corn, beans, and wheat, because the trade's factoring that in right now, the trade estimates are average estimates, I should say, are below where USDA was for November. Not a lot, but enough to make the market think that supply is still falling faster than demand, or demand is not shrinking because of the recent price rally we've seen. I think the second thing, and this is probably even more important, and it's something that I talk to clients about nearly every month, is that if you go back and look at reports that stimulated buying or stimulated selling or cut short a buy run or a rally, it's usually been because of USDA's wheat number, either a domestic wheat bump or a global wheat bump. And we've seen that a lot in 2020. You brought up 2020 in the USDA reports. The biggest memory that I have of these reports is if you have good news in corn and beans, but you don't in wheat, then the market rally may be very short-lived. And so if we could get a wheat supply reduction globally, I think that would do a lot to allow the corn and beans to run more on their own fundamentals. And the trade estimates are actually expecting a small increase in world wheat ending stock. So I'm asking a lot, but I'm expecting a lot these next few months, as you and I have talked about. May not come on the December report, But January, February reports especially, I think there's enough weather problems around both northern hemisphere growing regions and southern hemisphere growing regions that net we're reducing wheat supplies. So hopefully we'll see that in the December report on WASDE's numbers Thursday.
Well, and Mike, let's talk a little bit more about wheat, and let's dive into this because, as you alluded to, and we've talked about this quite a bit. Wheat really can help to drive this corn soybean market, and we see the dollar it's remaining lower end of the range. Really hasn't shifted any of that export competitiveness yet, though. At least in a big way, it seems a lot of those tenders still go into the Black Sea region, but you know looking at this market today, it was a leader slightly up, 13 and a quarter on the December contract in Chicago, up, 13 and a quarter in that March Chicago contract, up 14 in KC. Looking at this wheat complex, and you mentioned some of those factors you're looking for. I'm curious, can we break out of maybe some of these doldrums we've had and watch wheat prices trickle higher?
Yeah, a couple of things. I'm glad you brought up the export market because we talked last week about how we were getting more competitive at the Gulf of Mexico against our big competitors. We have seen now South Korean millers buy U.S. hard red wheat as of this week. It was a small bit of business, but it was business nonetheless, and that was very welcome to see that. I think the second thing, Jesse, is we probably, as we go through the winter, need to hone in more on not just the U.S. hard red wheat belt, but the Russian and the Black Sea, Ukraine wheat belt. And that includes the other like Romania is another key country as well. And Kazakhstan is a small country as well that produces some wheat that we compete against. But what we're seeing is some of the private estimates are starting to come out from Russia and from some of the big satellite companies that do agricultural research, but mainly use satellite information and algorithms. And all of them seem to be talking more about the drought and how the crop is maintaining itself for right now, but it's pointed towards a downside in terms of production potential, especially if rains don't come as we get into the springtime. So unless we'd have a big shift in weather pattern this winter, I think we're kind of gearing up for those lower supplies, those lower yields per acre or hectares per acre. And I think that's, yields per hectare, yields per acre, that's coming down the pike, I think. And I think to answer your question, yes, I think the trade will start to key in on that as we get closer to the February, March timeframe.
Mike, on the corn side, we finally saw first sale of the week on the export wire, 257, just over that metric tons, 1,000 metric tons sold to Mexico. Starting to see some spring corn offers appear out of South America, but not at a level to really shift any business yet. Corn out of the major commodities was third place today. It was, higher, but only up a little bit. And we still seem to be range bound here. But I know a lot of producers, we've talked about this before, sitting on corn. And I think they're all starting to wonder, are we going to stay here the next few weeks, months ahead? Or are we going to break higher, break lower? What are the trends showing you right now?
Yeah, no changes since we spoke last week, and that the corn's probably a follower to the wheat, to the soybeans until we get closer to our acreage battle here in the United States. That's the downside of corn, is that it's more of a follower. But the upside of corn, in my view, Jesse, is that the ethanol data, which came out on Wednesday, we saw another production jump. Yes, we built stocks and we're running about a 6-month high in stocks levels, but we're also running a 9-month high. I think it was, a 9-month high in production of 991,000 barrels a day. And so I think the ethanol market is solid. Livestock market is still solid. And the export market, I think, is very solid as we go into the wintertime, especially given that Argentina continues to miss out on a lot of rains at a crucial time period. One of the things that maybe the corn hedger needs to think about as we go down this next 20 or 30 days and as we get into the holidays is the export market in particular. I run a what I call an elasticity model, and what that is a price model based upon key futures prices and based upon key time periods of the month, that I try and get an idea of where the trade is trading, especially heading into a USDA crop report. And at 425 corn, we're probably trading right at that 1.7 billion bushel carryover that we've gotten kind of used to by both USDA and in the private market. So I think the market feels fairly well balanced. And that means to me that we'll continue to see a good export clip in the corn market the next 60 days because we're still by far the cheapest out there. So as long as the pandemic doesn't pull out that demand in agriculture and other commodity goods, then I think the corn is poised to be maybe one of the best export markets we've seen in probably 10 or 12 years would be my hunch.
Mike, let's shift over to the soy complex here just briefly. We've kind of touched on it, talking about corn, wheat, and everything else. But, we continue to ship and crush at a good clip here. We got that resistance at that, monthly high right around that $12 mark. We saw a good day on Wednesday. We were up 10 to 12 cents across the board, at least in the nearbys on soybeans today, kind of in that 1160 range near that 20-day moving average is kind of where we found some support right now.
Mm-hmm.
Moving forward, we're working through the holiday season. I think a lot of producers maybe will probably be thinking about getting comfortable in this range where we're at with 1160. Do you think we're going to see a big run up anytime soon or not?
Yeah, I'm starting to be poised for that. In fact, on weekend copy with clients and subscribers, I spoke about buying back into the beans. I feel like the timing is better than now that we're past Thanksgiving. The timing's better since we've corrected the meal market, crush margins are coming back, and we've corrected the wheat market. And so the things that were holding the beans back, in my mind, are not there anymore. The USDA report, I hate to put so much on one report, but I do really feel as though that the USDA report is going to be a crucial factor to the beans going up, because that same price elasticity model that I was talking to you about in corn at about 1150 in soybeans, you're really not going much below a 250 carryover on my model. So Jesse, I would say to you, if USDA stays below 200 million bushel carryover in the USDA report, and we see Rio Grande do Sul and Argentina and some other key provinces maybe only get 30 to 40% coverage of rain the next 10 days, it would make sense to me that we would go back up towards that $12 level and maybe eclipse it. The price model would say, looking at nothing else, if you want to get to a 190 carryover, you probably need to be around 1250 to 1275 in lead month futures. And so that's what I'm heading towards in my mind. That's what I'm talking to clients about right now, and trying to position myself in accordingly. Not buying the break so much as buying a breakout. In other words, I would jump back into this market if we got around above 1275, 1276 area, or excuse me, 1175, 1176 area on a closing basis after the report. Then I'd be looking at those upward targets I mentioned.
Yeah, it'll be something to watch here for sure as we get into that report tomorrow and how the market reacts to all those numbers. Mike, let's switch over to livestock cattle today. Fairly mixed day in the cattle trade. Feedlot country, pretty quiet. We got a few bids out in western Nebraska around 107 today on a live basis. Asking price still around that 109, 110 range. I mean, I feel like we have some good support in this cattle market and the hog market too. We'll get to that in a minute, but we have the support there, but we're staying range bound. We're not moving out of this range. And again, it probably comes back to COVID worries and demand issues there.
Yeah, I think that's exactly right. And I think, like we talked about last week, I sense that corn and cattle are a lot alike, that corn is waiting on wheat and beans. Hogs are the ones that are driving the cattle. One other thing that I think you're 100% right on as far as the kind of a doldrums for cattle, but well supported because of the price action and not bad numbers of marketings, given the fact that we are in the holiday time period and it's really not about beef yet. That comes another couple weeks from now with the New Year's holiday. I think the feeder cattle market is something that maybe we'll want to try and show a little bit more upside. I say that because Oklahoma City has been fairly good demand, moderate demand, as quoted a past couple times this week. And we're seeing that 140, 142 level for those 7-weight steers. A good quality steers, granted, but still getting a decent premium over the feeder cattle index and over the Jan feeders. And so we're really trading in the cash market anywhere from a $3 to $6 premium versus the feeder index or versus the January future. So I think the feeder break to the downside has done its job, because it sure seems like the cattle are still, like we talked about last week, feeders very active still. Had a Nebraska client go to his steer sale, calf sale, and wanted to get some replacement bred heifers and such. And he said very good demand, very high prices. Everybody's got grass, it sounds like. And with this warmer weather, they're really stocking up. So I sense the feeder cattle market has got a really good bid underneath it at this point, at least until we know what the winter weather is going to be. And the feedlots seem like they're pretty current at this stage of the game as well.
In the hog market, Mike, it seems like we got some moderate support there today. That December contract, I know those options going to expire soon, but we've kind of seen the market adjust and get ready for that option expiration. I mean, we're sitting 66.27 on the February contract, 65.12 on the December contract. Just looking at this hog market in general, I know it's kind of the same story, but looking at pork cutouts as well, values really didn't move much today. Weighted averages, they're kind of hanging in that 54 range. I mean, this hog market, what are your thoughts on after seeing another week of trade here, where we're going to go with this hog market?
Yeah, two big things: one, supply; one, demand. The supply side of the equation continues to suggest that we've got some real serious outbreaks of not just PRRS, but now I'm starting to hear this week quite a bit of PED virus starting to crop up, I should say, east of the Mississippi River. I haven't heard too much in Iowa yet, and haven't heard too much in Minnesota yet. I'm going to try and get some feelers out this week to find out in those regions whether they're getting that kind of disease pressure. But Illinois, Indiana, sounds like they're getting a pretty decent outbreak of some pretty serious diseases. And so I think your supply side breeding numbers are going to be down, and that's going to help us eventually. And on the demand side, I think the biggest thing that I saw this week was the U.S. trade data showing those pork exports up around 20%, pork imports down around 7%, January through October. So this is calendar year to date. Essentially, we're running almost 28% better net trade on pork than we were a year ago. So I think we've got a really good market underneath us right now, as long as that pork and bean trade doesn't come in and mess with us with the funds. That's been the biggest issue in 2020. As I look back in 2020 and think about 2021, if there's one thing that I need to really watch more closely, is the way that funds trade China through the pork and through the beans, through the soybeans and through the hogs. And I think that's going to continue as we march through the next president inauguration and the international trade and the policies we formulate with China here, especially the first 6 months of 2021. So if the beans get bought after the USDA report, it'd really be nice to see the hogs get bought, because that would suggest to me the funds are back in on the long side.
Mike, any other final thoughts you have for us today, or any other final thoughts about tomorrow's reports coming up you want to share?
Yeah, just real briefly, I think the macro side is working in the way that we have been talking about, Jesse. I think the crude oil numbers, a massive increase in supplies due to imports. So we're seeing a slowdown in demand there. I think also the fact that we haven't gotten this COVID stimulus bill out, I think, again, the equities markets and some of these other markets like copper are probably out over their skis on the long side. So I like the idea that USDA comes in and supports this market from a supply demand standpoint, because then it takes more pressure from the macro side of the equation off the grains.
Well, we'll shift our eyes to a WASDE report coming up tomorrow and see what USDA has in store for us here for the month of December. Mike, if folks want to reach out to you to get a little help with their marketing advice, what's the best way to do that?
Best way to do it is to get a free trial on the website, globalcomresearch.com, and sign up, and then I'll give you a call after the trial period's over with, just once, and we'll see how you liked it.
There you go. Mike, appreciate the time as always, my friend, and we'll talk to you again next week.
Thanks, Jesse. Appreciate you having me.
Mike Zuzolo with Global Commodity Analytics joining us here today on Market Talk. That's going to do it for our Wednesday, December 9th edition of the show. Find us online, markettalkag.com, Apple Podcasts, Spotify, iHeartRadio, Google Podcasts, and so many more ways to listen. You can find it all at markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.